I'm your host, Jason Raznick, founder of Benzinga, a leading platform in the financial world with the mission to level the playing field for individual investors. And this is the Raz Report podcast, where we share inspiring stories, expert advice, and exclusive perspectives to keep you ahead of the ever-changing world of investments and entrepreneurship. Let's dive into the show.
All right, this is an exciting one. We are on site for the Raz Report at Charles Schwab. This is an awesome one. We got the head of Schwab Investing, the brokerage you use, the online experience. We're going to learn so much. This guy is not just Schwab. He was at other companies, building out platforms, doing integrations. We are with James Kostulias. James, hello. Thank you for coming on the Raz Report. I'm very excited. I know you're the head of trading services at Schwab, but before that, you've been in this industry for how many years?
26 years.
So you just, at Schwab, you just finished an exciting integration. Can you talk a little bit about that?
Absolutely. Yeah, the merger of TD Ameritrade and Charles Schwab, a real labor of love for the company. Started back in 2019, a little bit before the pandemic, which made it sort of super unique and super interesting. But spent the last 5 years, spent about $1.5 billion in technology investments, infrastructure investments, building out the trading infrastructure that was at TD Ameritrade to Charles Schwab, bringing the Thinkorswim platform over, all of the scalability work to really capitalize on all of the crazy growth we saw in the industry coming out of the pandemic. And it was a long time. We did it the right way. We could have probably done it a lot quicker, Jason, if we just wanted to convert accounts. But it was much more about building experiences around those accounts for the clients that we brought over. We brought them over in 5 separate transition groups to make sure that we were doing it all the right way and we would feel really comfortable about the ability to support all the clients. And we finished up in May of this year, the weekend of May 10th. Totaled $1.9 trillion in assets and about 17 million accounts.
That allows you to do a lot of stuff. But before we get to that, so I grew up day tech. And then I went, and you were at Daytech.
I was.
And then I went to Ameritrade, because Ameritrade bought Daytech, right?
They did.
And so I've been to I have my Ameritrade accounts, I have an IRA, I have a personal account. And so when Schwab bought, I was probably one of the last ones to move over because I wanted, like I had my experience and I was used to it. And that's typically, a lot of people, you're just used to, it's like when you drive to work or whatever, you go the same route or what have you. And then eventually I did the move over, and it was really shocking how smooth the move over was. Like, you get an email. It wasn't like I had to go do like 6 things. It really like knew my personal thing. It had both accounts integrated. I was shocked at how good the experience was to get me to, and it was just like literally 2-3 clicks. And I was really surprised by that. Usually it's a lot more complicated when you're especially talking about finances.
No, appreciate that. And either I've been stalking you or you've been stalking me. So yeah, Daytech in 1998. And then when Ameritrade bought Daytech back in 2002, came over to Ameritrade. And then here we are now in 2024. Feels like the blink of an eye. But look, really appreciate that. We spent a lot of time on that experience, right? And we understand clients didn't ask for this, right? And so, it's not really fair to burden them with the hassle of doing a million things in order to move their account over to a new platform. And even once they got here, they have to learn a new platform. And that's not easy for the clients. And so we spent a lot of time on the transition. We ask you to set up your credentials so that you can log in. And then we really tried to take care of all the rest behind the scenes.
But the credentials you set up made it super, like I didn't have to create all this new stuff. Now there's things that I am used to from the Ameritrade green site that aren't necessarily on Schwab yet. And I'm sure that they'll be there eventually. But to watch the watch list monitor, actually there were some things that are better on the Schwab that how I sort my watch list, I watch my portfolio, how I see daily gains versus weekly or yearly gains. It's actually less clicks, which was really cool. So there's things you just don't know the benefit, and then you're okay, this thing, but but this is not your first integration. So like you were used to this. You mentioned you did another one a few years ago. Can you go to that one for a second?
Yeah, before Ameritrade, before Schwab and Ameritrade, we did the Scottrade integration back in 2016.
Was that one more difficult? Was that a lot of learnings?
You learn from all of these, Jason, 100%. That one was less. Scottrade had less functionality than Ameritrade had. I mean, Ameritrade had the premier trading offering, right, with Thinkorswim sitting at the epicenter of that. And we knew we needed to bring that experience lock, stock, and barrel over. With Scottrade, it was much more of a client conversion or an account conversion behind the scenes, as opposed to all that additional infrastructure and front-end client-facing work.
How many accounts did they have back then?
Probably would have been about 5 million.
So it's a different level. So
much smaller.
So you brought over $1 trillion from Ameritrade to almost two. And all those, how many accounts? You said like
17 million.
So what does that allow you to do different? Like, is that make it easier for clearing? Does that make you guys have more, like when you see M&A in other industries, okay, economies of scale, like what are some of the things that it helps with?
Yeah, so let's start a little bit with some of the stuff that it doesn't help with, right? You need people, right? And we're big in making sure we have the best technology, but we also have the best people to support that. And so from a people perspective, we wanted to maintain all the ratios to make sure from a service perspective and an in-branch perspective, everybody was available to help deliver on the experiences that clients needed and wanted. You absolutely get exactly what you said, though. You get economies of scale on the back end, right? Being such a heavily technology firm, we're able to do a heck of a lot for not a heck of a lot of money on the back end in terms of number of accounts, right? In terms of efficiency of trade processing and things like that. So you see where you'll see growth when you add accounts with people, you won't see that linear growth in terms of technology spend for your core back office or even for your front ends. You'll need to add compute, you'll need to add servers and things like that, obviously. But at those ratios, it becomes very, very, very cost effective to do that. And what it really does in our case is it allows us then to invest more into the client experience, into the front ends, into education for our clients, into live events and coaching, and honestly, a ton into the platforms and making sure we're continuing to enhance on that digital experience. And I really appreciate what you said around, hey, there are some things at Schwab that are certainly better than Ameritrade. At the same time, for these clients who didn't ask for this, we get that it's different, and we get that we need to continue to work with them and be there every step along the way to sort of support them as they acclimate themselves to Schwab.
Well, I'll give you something where on Ameritrade, they didn't have this, so I put some money elsewhere, even though now you could buy ETFs that are money markets. But I'm going back to like 10 years ago, or maybe 7 years ago. Ameritrade didn't have like a bank account where you could earn, so that was something that bothered me because I didn't always want to be invested in the market. Like I didn't want to have all the, I wanted to sometimes have money to sit aside, but then the problem is I got no interest on the money. I get it, interest rates were zero for the last 5 years or whatever. But before that, Ameritrade had no investing accounts. Then I had opened another brokerage account. But with Schwab, you have a bunch of investing options that you didn't have with Ameritrade. You have a bunch of different savings accounts, more financial advisory, help you can get for families and all that stuff with Schwab. So there are those benefits that, let's say that merger happened 15 years ago, I probably wouldn't have had another, you know what I mean? Because that's a benefit. Why did Ameritrade never have a bank account type stuff? Is that just a bunch of different licenses you would have to get?
Yeah, there are a whole bunch of reasons, including the merger with TD Waterhouse back in 2006, where we had a partnership where TD Bank was sort of the bank that we partnered with at Ameritrade, but it precluded us from actually having our own bank.
That's right, TD Bank, okay.
And you're right. And when we look at this, we see huge adoption in banking products from the converted Ameritrade clients. We see a ton of uptake into managed money solutions like Schwab Intelligent Portfolio, the branch network and their ability to offer advice to clients is much more robust than it was on Ameritrade. And look, at Ameritrade, we didn't focus on those things, but we did focus on trading. I think a key message would be here, our offering of what we call Schwab Trading powered by Ameritrade. And that's not an accident that we kept the powered by Ameritrade with the Thinkorswim platform at the epicenter of that. Really gives us what we think is a no trade-offs approach for all investors and all traders, right? Because I think, I'm the head of trading services, but, traders invest, right? And when we have all the products that Schwab have, just like you mentioned, banking and access to fixed income and broader wealth solutions, you want their trading dollars. They're seeking alpha money, but they've got long-term money as well. That's not sort of, in and out, in and out, in and out. And to your point, you want some form of liquidity. So you want a cash offering, and then you want some longer-term investments. We believe the combination of Schwab Trading powered by Ameritrade to get at that trader population combined with everything that Schwab offers, it is what separates us from everybody else, quite frankly.
And I see, I bet you all see things where I'm trading on the platform it'll be like a pop-up right next there. Hey, if you have cash left over, do a CD or do this. I feel like I'll see more integrated things. I do see something on the bottom where I can get more money in a savings account. Yeah. But I feel like that, because there wasn't that option in Ameritrade. There was not.
Yeah, and the goal will be to do that in a way that is helpful to you and not intrusive to you, right? Yeah. And I think that's one of the beauties about the Schwab model. If you want to be self-directed and manage your own, $10, $100 million, $10 million account, great. We've got all the tools and all the support for that. If you want to have part of your money like that and part of your money where you have a lot more help and is more of a managed solution, we've got tools for that. Yes. And then to your point, if you've got cash on the sidelines and you want to earn a higher rate on that cash, non-transactional cash, we have CD products, we have Schwab money funds, we have government money funds. We have all of those options.
You have fixed income, you have bonds. You have a whole department, depending on the size of account, that maybe it had on Ameritrade, but I didn't see it really.
The fixed income business at Schwab is probably, 10 to 15x what it would be in Ameritrade, maybe even more, to be honest with you. And that's exactly right. We're really trying to make sure we build out that no trade-offs approach so that whatever financial instruments you're into or interested in, Schwab's the place for you.
Yeah, absolutely. Now we're going to go back to how Schwab is big into education and a couple other things. But I want to, before we do that, what's your background? Meaning, when you were younger, did you plan on getting into financial services? Were you looking to be a baseball player, basketball player? What's a little bit about your background? And again, we're with James Kostulias, head of trading services at Schwab, and one of the man in charge. You can call him JK as well.
Appreciate it. Can I call you Raz?
Yeah, call me Raz. There you go. Where are you from?
Yeah, so East Coast guy, born in New York, Queens actually. Right. Lived in New Jersey most of my life since I was about 6 years old.
You're in Queens because coming to America, they go look for Queens, right?
Oh yeah, that's exactly right.
That's great.
Rockaway Beach.
Mm-hmm.
But yeah, look, my dreams of being a baseball player existed, but they were dashed very early based on my skill level. But that was a lot of fun for a little bit. And then, no, finance wasn't, something I was always sort of interested in. I thought I wanted to be a teacher for a little while. I went to Rutgers University.
What kind of teacher?
History was my absolute favorite subject.
We're not going to get into Jeopardy things that kill me.
Okay.
Trivia, yeah.
No, I don't know. You probably hold your own. But ultimately, then I worked in restaurants all throughout college. Learned a lot of life lessons there. Loved the restaurant business. Thought maybe I wanted.
Were you a waiter, chef?
Yes. Bartender, yes. Okay, dishwasher, yes. Keep going.
So you can make me a spicy margarita.
I can. A really good one.
Wish we had them here. Go ahead.
Me too.
Just no salt on the rim. I don't like the salt for some reason, but
okay.
Most people do. I
no salt guy, huh?
I don't know. I think I have enough salt with all the bad food I eat. So that was the way
I'm not sure I would have pegged you for a no salt guy, but all right.
On the rim. Yeah.
I respect it.
Okay, but I do love the spicy margarita. I don't know why.
So then out of college, I was working in a restaurant, and a friend had actually just started working at Daytech Online, and they approached me and said, "Hey, this is like a different kind of place. It feels really cool. It's a financial services company, but it's a technology company. It's an internet company."
Was this out of Rutgers?
Yeah, this was out of Rutgers.
Okay, yeah.
And I was intrigued. I went down. I interviewed. I talked to some people, and then, like a lot of others in the industry, I came in under the same thing, like, hey, we're going to do this for 6 weeks and train you. You're going to pass your Series 7 and it's all great and good, or else you're not going to have a job. And I said, okay, I'll try this. What do I got to lose, right?
Yeah.
So gave it a whirl, passed my Series 7, started out on the phones, worked on the trade desk.
What year was this, you remember?
This was 1998.
Okay. So you're in the high, okay, yes.
Yeah, this was 1998, right before the market crashed.
Yep.
And then the market crashed, and then that's when Ameritrade and Daytech came together. Both sort of needed a partner at that point, coming off the tragedy of 9/11 and then the market crash of 2000. Both companies needed some help. So that marriage ultimately worked. And honestly, I actually spent the years.
By the way, I stayed on Daytech for as long as I could. I was not moving off that.
So during that integration, I spent some time actually in the training world. So it's sort of my version of teaching, right? I taught a little bit of Series 7 class, and then I was helping the Ameritrade folks learn about the Daytech applications, because back in that merger, similar to this one, we kept a lot of the Daytech front end products because they were great.
There was a great streaming product. It was
the streamer.
Oh, it was amazing. It popped to the right, and I was on my old laptop, and I was in college, and Oh my
So
God.
Raz, think about this. First streaming quotes live, Daytech Online. We had what we called a 60-second guarantee.
You should have got a patent on that, by the way. Streaming quotes. Okay, go ahead.
We had a 60-second guarantee. That was
Excellent.
revolutionary at the time. Charged $9.99 a trade, which now seems amazing in a world of zero, right?
Yeah.
But yeah, if your order wasn't executed, marketable order wasn't executed in 60 seconds, we'd rebate the commission, and that was a huge deal. And now you fast forward to where we are now, where our marketable orders are all being executed, sub-second. It's crazy how far we've come.
Well, you know what's crazy? In 2001, it's on my phone. I marked as a favorite because if I ever get too cocky in the stock market, I want to be brought down to earth. I sold Amazon shares in 2001. I have the exact date for, like, say, $9.40 a share or $10.40. But hold on, the commission, I think it was from Prudential, was $1.80 a share. So the commission, it was back then, it was 20%. I have it, somewhere. And the only reason I sold it was because I had a margin call because financial advisor like, oh no, the market's coming back, you need to buy more, and that was one stock of value. Yeah, that was a mistake selling, but you guys were doing $9.99, and these other places were doing 15% commission per trade. Like, that is a huge change.
I used to have people call me at the trade, and they didn't believe it.
Yeah.
They're like, how much am I going to pay? I'm like, $9.99. They're like, no, really, how much am I going to pay? No, for the whole thing, for all 1,000 shares, how much? $9.99.
And if you think about that, people just don't believe it, and it's like, sounds too good to be true, but that's what it was.
Seems like a different world.
A different world, but it wasn't that easy to switch accounts over and all that stuff back then.
No.
So that's why I was, so anyway, so that was, then you got in there, you were at Daytech, you stayed during the dot-com thing, the stuff crashed, but Ameritrade came in, you were one of the guys that knew the stuff, you were training Ameritrade people, so you were moving up in the organization, basically.
Yeah,
okay.
I've been really fortunate to have a lot of jobs I worked in technology, I worked on the retail business side, I worked on the digital side, I worked on the trading side, I worked on the operations side. So it's been an amazing experience for me. I'm super fortunate to be able to have sort of cycled through all those jobs. And then Ameritrade, you really did a lot of acquisitions within the industry, which gave me a ton of opportunity to learn and meet some great people. We did the Thinkorswim acquisition back. So we talked about one crash with the dot-com crash. We talked about the real estate market crash back in 08 and 09. We acquired Thinkorswim right after that in 2009. So maybe sensing a little bit of a trend here. And then we talked a little bit about the Scottrade one in 2016. And now here I am at Charles Schwab in 2024.
Well, then the Ameritrade Schwab one, it was during the hard times, but then no one knew that when COVID happened, the markets would take off and
unbelievable.
That was really amazing timing for, at least,
It couldn't have been. And look, right on the right before the acquisition was when Schwab went to zero with commissions, and then Ameritrade quickly followed. And then there was a lot of discussions around what was that going to mean for the industry? How are we going to replace sort of all that revenue and be in a position to be able to deliver on everything we need to deliver from a client experience perspective and everything else? And I don't think anybody would profess to be able to sort of read the tea leaves and saw the exponential growth we were going to see. Obviously, largely fueled by the pandemic and what we saw there, but obviously it was more than just about that, right? With the meme stock craze, and I think with the continued evolution of technology, a lot of those things were trending that way anyway. And I feel like the pandemic just sort of opened Pandora's box on all of it.
Yeah, one day there'll be a book written about it because there's so many things that you just couldn't predict that happened at that time.
Totally.
And the day it went zero commissions and Schwab announced, like, I remember the day. I remember where I was.
Oh, me too.
You do? I literally remember where I was. And then that was like around 4 o'clock that Schwab announced it, I think. And then Ameritrade came out at like 9 o'clock.
Right away.
And yeah, I mean, and the industries have been changed forever. Now, I do think people get more in the market because it removed the barrier to entry.
It did. And you wouldn't think, right, coming from where we came, right, and where the industry sort of started, and then Mayday back in 1975 when, the standards of commission was lifted, you wouldn't have thought that, where we were at the time, where that was $7-ish, $8-ish, you wouldn't have thought that would be such a barrier. But removing it totally and going to zero, I think absolutely changed things for a whole new crop of traders and investors.
Absolutely. But you said 1975, the standard of commission. Was there a governmental rule that got broken?
There was, yeah. So it's a Mayday. I think it was May 1st in 1975. This actually started the discount brokered industry. And I'm getting a little history nerdy on you here.
I know, I remember.
But so you had a lot of the pioneers of the industry, Charles Schwab, Joe Ricketts, who was the founder of TD Ameritrade, Roger Riney was the founder of Scottrade, where there all of a sudden, essentially, the legislation came out that said there's no longer needs to be sort of a cap on commissions, and everybody was
thinking, a cap? You mean a
floor or a ceiling, actually.
Okay.
And so what everybody thought, though, was exactly that removing the cap was going to have, all of your classic Wall Street firms sort of go even higher. And some of them did, but the likes of Joe and Charles Schwab and Roger said, we're going to go the other way, and we're going to go lower, and sort of opened up the door to what they call this discount brokerage industry.
So I remember a firm in Detroit, I don't know if it was National Discount Brokers.
NDB.
Oh, you know what that? Okay.
Ameritrade bought NDB too, right? Right before they bought Daytech.
Oh, really? Okay. So they didn't put that together.
It's crazy how this all comes together.
It's crazy, and so they removed that cap, and then that's how these online
started sprouting up. Yeah.
I wonder what.
Back then, no online, obviously. Back then, phones, whatever, and then led to touch tone trading. You remember that?
Yes.
There's a little bit of touch tone trading, and then obviously, the internet stuff in the mid 90s.
Did Schwab exist before that happened?
Oh yeah, Schwab existed back in the 70s. Yeah,
really?
We started our 50
So it existed before they moved the cap. So my point is, the cap thing, was that Charles going to the government to try to remove those caps, or?
I don't think Chuck was involved in that actual move then. I'm not sure what prompted the government to ultimately move it, but I think there was that set of entrepreneurs, much like yourself, Jason, who sort of saw that opportunity to go, we can really capitalize on the secular trend that we think is going to happen here, and absolutely leaned into that notion of, you don't need pay a broker $250 to go buy 100 shares of, back then, Coca-Cola.
Yeah. Now, so many questions. I know you're tight for time here, and I understand. Our producer keeps showing me a clock. But a couple of things. I want to go to education, James, but also, as you answer your education that Schwab offers and your live video network, talk also about how investors' behaviors have changed over the last, say, 20 years. But I think that's an important part that you guys are doing right now.
Yeah, I think it is. So look, I think there are phases, right, that go along with the evolution of technology and the changing of the markets. And so, like you talked about back in like the late 90s, where it was much harder to move an account or to move money. Now, account transfers and money movement are really very frictionless, right? And so it's really easy to do those things. We were in a period of near zero interest rates for a really long time. And I think clients developed trading strategies that worked in that environment. Didn't make sense for you to have any cash sitting around, as an example, obviously. And now we moved into an environment with heightened rates and honestly low volatility. I mean, the VIX is sitting around 12 for quite a while, honestly. I think, don't quote me on this one, but I think you got to go back to February of 2023 to have our last day where the S&P dropped by 2% or more. So you've had, just not a lot of volatility and, pretty consistent rising up bullish market. And some of the strategies that worked or made sense back then don't make sense anymore, right? And so I think as clients are looking for more alpha, one of the things they're looking at is sort of the derivative market. We've seen we've seen continuous solid growth within the derivatives market. We see about 22% of the options volume at Charles Schwab, which is a really big number. I think some people are looking more towards some of the what we would call closer to expiration instruments, where you've got more volatility in them. But recently, with the AI craze and then a little bit of the resurgence of some of the meme stock stuff, you're seeing our clients engage more in some single stock names. And so we do something, Jason, called the Schwab Trading Activity Index, the STAX, that looks at client buys and sells and puts that into an index and comes up with a lot of insights, not of what clients are saying, but what clients are actually doing with their money. And so at 35 million accounts at Charles Schwab, we've got a nice chunk of the retail marketplace there. And so we are definitely seeing clients pour into stocks a bit more. We're certainly starting to see them a little bit more sure, I think, of where the economy is going. They still have concerns, inflation being a huge one, interest rates being a huge one, the election obviously being a huge one. But I think people are starting to believe a little bit more in the sort of the soft landing here, right? And I think you're seeing a little bit more of a bullish sentiment coming out of that. And so I think one of the things I'd say to sort of the younger traders or the newer traders sort of getting into the market, of sort of understanding that, of like, the market's going to go all over the place, right? And everybody knows it sort of goes up and down. But even in times of not a lot of volatility, there are different swings in the market. There are different patterns in the market. And, how you trade within that market is going to be really important. In other words, what worked then may not work now, not necessarily because your thesis is bad, just because the market is ultimately different. And that's where we tie a lot to education and a lot to something I know you're incredibly passionate about, which is research, right? Clients are telling us through the Schwab Trading Activity Index, they are spending more time doing their homework before placing trades.
Yeah, I mean, that's when I started Benzinga. Part of the reason was I thought it was unfair that people in a hedge fund can get information ahead of someone else. It wasn't fair democratization. And so then I also thought crowdsource smart people that understand, hey, we have a person that knows muni banks really well. Why do I have to go pay 2 and 20 at a hedge fund? Can you, we have a guy on a platform, he's up 15% yearly for 15 years. All he does is muni banks. That's all he does. And these aren't, and you would say, why didn't you start a hedge fund? Because the size of the banks are small and you can only do such limited size. But the point is, information is there. Now you got to figure out what is valuable information, how you can use it. And then where there are tools, you were talking about your index that you guys see what buys and sells, but also Warren Buffett says maybe don't diversify, but I feel like diversification, through buying indexes and things like that. I know this is not an index you can buy, but indexes can make crazy market gyrations live through them. Like back in the day in 2000, I think we were 90% intact just in generally. And I feel like maybe we are a little bit with S&P 500, but there's also equal weighted stuff. And so people use Thinkorswim, they use Schwab. How does a younger investor, what would you suggest a younger investor, someone who just finished college, they have $10,000 to invest, $10,000 to invest. They have other money that they have in savings, but how would you say they should get started with you?
Yeah, I mean, I think, look, you brought up the index funds, and I think index funds are a great way to get started, right? And I think what you'll see is over time, I would ask the person, obviously, hey, assuming you don't need this money anytime soon, right? You're putting this money away for the long haul, right? I think indexes are a great way to do that. You could look at the SPY, you look at the Qs, you could look at diamonds, and any of those indexes would make a heck of a lot of sense to a young new investor starting in. And then I think one of the things I would say, when we bring it back to meme stock a little bit, right? It brought a ton of new people to the market, which was fantastic, right? And it brought a lot of young people to the market. I think what makes me really happy is a lot of them have stayed and a lot of them are still here. And a lot of them have grown significantly. They've matured as people and they've grown as investors. They've grown as sort of traders in that time. And where maybe they came in because of the allure of getting rich in meme stocks. But I think a lot of them have learned. And look, we do coaching at Schwab, 20 plus hours of live coaching a week. We've got the Schwab network.
Coaching is one-on-many,
Coaching is one-on-many in live forums and in recorded forums.
Okay.
But the live forums, you can sort of what we say, look over the coach's shoulder and watch them, put on an options position, watch them analyze a chart.
Very cool.
Look at some of the technical indicators and help you with your entry points and sort of your exit, how you think about an entry point and an exit point. And I think that to me is what is really cool for the young investors. I would say exactly what you did, coming in with that get rich quick mentality. We know how that movie ends, right? Well, that movie doesn't end well.
So my biggest fear in the markets are that you burn out a generation of investors. That's what happened in .com. That's what happened a little bit with GameStop and crypto. So back in the day of great GameStop, these Wall Streeters came into our live video room. We did the guy, the hedge fund. Anyways, a long story short, the stocks went to 400. And people, if we wrote a story like Goldman Sachs downgrades GameStop, if we wrote that story, they would kill us online. People would write all this stuff.
Yeah.
I eventually put my phone number on the Reddit forum, whatever. I wanted these people to call me. And they're like, I have all my life savings in GameStop. And so I was saying, let's say you're right. Maybe it's going to go to 2,000. But if it doesn't, and you made all this money, take some off. And this person's like, I'll never take off. And then 2 years later, a year later, I get text message of sorry. And I wasn't doing it to be like, who's right, who's wrong.
I'm trying to help.
I'm trying to help. I'm trying to help and say, even if you're right, I did it once where I had so much money in like a stock way back when, and it's up this much, and that's when maybe you trim a little bit. Like because when it's so risky, and so I was trying to help, just like you just said, you don't want to burn out a generation of investors.
No, and I think some of those basics of having entry points and having exit points, right?
Yep.
And so, look, it's hard to sell when a stock continues to go up and up and up, right? But having a disciplined approach, and I think a lot of the most experienced traders I talk to all have one thing in common. They've got a plan, right? And they stick to that plan and they try it. It's not easy, but try to keep the emotion out of it. And what I would say to your person with the $10,000 would be, look, if of that you want to put 9,000 in index funds and you want to do some speculative trading with 10%, okay, you can and should sort of think about it that way, as opposed to this idea of, you want to come in with all your money into a penny stock or a meme stock because you're swinging for the fences. And that's why education, that's why the service desk and the trade desk are so important, because unlike you, who you're throwing your phone number out there, our number's out there too all the time. We're begging for you to call as well.
Oh, yeah.
Tell us what you're trying to do and what you're trying to accomplish, and let us talk to you about it.
I mean, this was 2 years ago. I just didn't want people to be burned out, and that's what happens. They make all this money, but JK, one last thing. You have zero commissions. I almost would argue I would like you to reintroduce commissions. $10. Reason being is sometimes you don't sell stuff like that. Like sometimes, I said sell and like diversify, but sometimes you sell a whole position. It's $0, and it's better to stay in. And I think sometimes commissions slows you down, like it was like a speed bump.
Speed bump's a great analogy.
A speed bump, and I don't know if commissions will ever come back, but there was some advantage to like not. Trade. I'm talking about blue chip companies, not the stock trades. I'm talking about companies that you want to invest in for a long term, and you're like, you still own that? Like, I think some of my best investments are what I've owned for years and years and years, and that's
And I think that's a really important part of trading to sort of think about is you could trade a stock purely on the technicals, and what the stock doesn't even matter, right? You're trading on all technical indicators and everything else. If you're trading on a combination of technicals and fundamentals, buying those companies that you could see yourself owning. And I have one too. I bought it around earnings and I thought I was doing something smart and I wasn't, but it was a company I believed in and I held on through the next couple of earnings cycles and that's ultimately worked out.
It was probably one of the shoe stocks. I did that too. I bought a shoe stock and it was down. Then the guy's like, just hold on. And it ultimately worked out. It actually worked out really well with Crocs. They had really bad earnings, went down 10%. Now it's up like a lot. So, all right. I have so many more questions, but Aaron is giving me the thing. So we have to do the hook. Yes. So we got to do part 2 one of these days because I have some really good ones that I really wanted to get to. So I want to thank you, James Kostulias, for coming on here, head of trading at Schwab. Any questions? He has a whole team. You can call him JK. Thank you for coming on the Raz Report. This was awesome. I never knew about the 1975 cap thing. I got to read about that because that really, it's crazy. It took that many years to really, because I was paying, I told you, in 1998, I was still paying.
I know.
Crazy. So
Jason,
thank you.
Pleasure.
Thank you so much. Yes.
Great.